Alrighty, let's get started. Okay, so thank you everyone for joining us. Today we are honored to have Surajit Mohanty, and we're going to be talking about how leveraging SAP outsourced manufacturing for external tolling. It's going to be an exciting topic, and we're ready to get rocking and rolling. So before we get started with the topic, a little bit about us and who we are. So we're ERPFixers, and what we focus on is providing the top quality experts in all the core modules of SAP. So this can include SAP implementation and support, SAP best practices and assessments, material ledger conversion, enhanced cost component reports, and of course, S/4HANA transitional roadmaps. Whatever you need, we can provide you with the service. We're known for having the top quality experts, as mentioned. So if you have any questions or comments, feel free to visit our website, contact us form, and we look forward to talking with you. And now a little bit about Surgit. So again, thank you so much for doing this webcast with us. A little bit about Surgit is he is a product costing and material ledger architect with 23 years of experience in SAP financial consulting. Now, needless to say, he has a vast experience in SAP so controlling and management accounting, and FI, which is financial accounting. These are areas spanning 9 to N implementations. He has delivered solutions to a broad range of clients with various roles in product costing, material ledger, average costing, transfer pricing and parallel valuations, profitability analysis, SAP TM, and SAP ACM. So all the major areas. You can contact Surjit. His email is here. We can add that into the recap email as well. Now, it's important to note that any questions that you guys have during the webcast, feel free to leave them in the comments. We will get to it at the end, and if we run out of time, then we will be sending a follow-up email listing out all the questions, contact information for both ERPFixers and Surjit. So without further ado, Surjit Mohanty, thank you.
Thank you, Rob.
Mhm.
Hello, guys. Very warm welcome for joining our webinar. So today we're going to cover these topics. And I was debating like how we should go about this subject. I know from my experience as a PCO consultant and from many of my coworkers, friends, and clients, we have always heard about this requirement. We have subcontracting, we have external tolling, but how do we make it better? How do we handle the external manufacturing truly like a manufacturing process within our organization or during our using our ERP implementation? So hence, we have this topic and this process that we're going to talk about today. I would like, I want to give you perspective of OM, which is outsourced manufacturing, prerequisites around it. That's the first thing. Second thing, also we will discuss about end-to-end process of outsourced manufacturing. We will go behind the accounting entries. And one of the major things I would like to cover is um, the comparison between outsourced manufacturing and regular subcontracting. We are very familiar with regular subcontracting. Many of our clients use it, blending the outsourced manufacturing to regular subcontracting. What benefit does it brings? And at the same time, is there any con? So we will talk about that under our pros and cons section. So these are the topic that we will cover. Moving on to the next slide here. To start with outsourced manufacturing, it's been there from a long time, pretty robust and mature product from SAP. And it blends quite well with subcontracting. Uh, and as we know from subcontracting, which could be used for external tolling, co-packing scenarios or repacking scenarios, depending on the business scenarios, many and various scenarios, outsourced manufacturing helps and leverage a lot to give business value to our clients. And using this outsourced manufacturing, we could get many production like or maybe process engineering like functionality to our and bring values around these processes into subcontracting. So subcontracting is well enhanced using this outsourced manufacturing, and we will see in the subsequent slides. One thing I would like to focus here, um, I know this is a vast area. Outsourced manufacturing can be complex depending on how much automation we want to bring into the process. It could be very much logistics focused also. But one thing we would going to cover in this webinar, our focus would be around accounting and processes around finance. So the logistic part of it, we will not cover as much as probably a logistic person would, logistic consultant would probably aim for. But nevertheless, we will touch upon the major key points, and if you guys have any questions, please reach out to us, and then we'll be happy to address any questions or open queries. So we'll move on to the next slide. So this slide summarizes the outsourced manufacturing. As I started to talk about, subcontracting gets much enhanced with having outsourced manufacturing. And is it a add-on? Is it something we have to pay for? No, it's all standard in S4 and in ACC, EHP 6 onwards. And I know many of the clients are higher, they have higher version of SAP's ECC if they have. All those versions, we have outsourced manufacturing as standard. Having said that, outsourced manufacturing needs, which is the last statement here, needs a business function, log MMOM2, and not to mingle the log MMOM1 is also available. So between 1 and 2, and 1 is the latest version, has a little bit advantage over the 1, which OM2 brings in additional reporting, etc. So this function business function, if it's not active, that is something we have to do. But as for HANA, at least 22 onwards, it's all standard. And before that, it was also standard, but I think version 19, we have to activate that. But depending on the versions, the latest and greatest of SAP, it's all standard. Now, what does it bring in? It brings in many functionality from logistics, especially integrating our external suppliers, external manufacturers with our SAP system. So we could bring in more functionality. We can track their manufacturing in a better way using outsourced manufacturing. But that is something we are not going to cover here, other than we would see the impact or the process steps in SAP. But how do we do the integration or a technical schemes and technical setup behind the logistic process? That will not cover here. It will be some other day. Excuse me. So the other bigger thing that subcontracting gets added to with outsourced manufacturing is the CO order. It's a controlling order type, which is the core concept of outsourced manufacturing. So every subcontracting purchase order will be assigned to an production order, which is like our CO production order, and that's automatic. I know many of my clients always ask me, oh, do I have to do something? How does our business process change? We already have something up and running. We have subcontracting going on. What's the impact? So we'll talk about that. But bringing in this function, activating in a live system it doesn't bring any harm. There is no negative side impact. As soon as we activate this system, business system can run going forward. And the CO order, the controlling order that we will have, is blended quite nicely with subcontracting purchase order. And we'll see examples of that. Another thing which many of my clients have been asking for is the segregation between goods receipt and components or our own stock materials consumption. So in a regular subcontracting process, we usually see that the goods receipt and consumption is one step, but that's kind of a separation that outsourced manufacturing does. The goods receipt of the material that is getting manufactured by our external parties, that step, and the materials that they consume to make it. I mean, they could have something else which is part of their overall fees or subcontracting charges, keeping that aside. But the components that we provided them, which is the core theme of subcontracting, that step, the consumption of the components, is by itself a separate step. So that's why I'm calling it out. It's a two-step approach versus one-step approach. Having said that, can we do subsequent adjustment? Yes, we can do in subcontracting. That's a normal process. But having outsourced manufacturing, usually that is lessened. We don't have to do that unless there is some discrepancies. And that the very reason is our component consumption is separated out. The goods issue of the component, as it's separated out, we could get the actuals from the suppliers, from the external manufacturers, and then we can consume the components using this individual step that it will make us go through. So these are the high-level points that we have, kind of salient features of outsourced manufacturing. Now, one of the big questions I have always been asked, okay, what are the configuration changes? What changes that do we have to do to make it work? So here are the changes. At least first piece is the RTR or finance changes. So one of the core feature of outsourced manufacturing, along with to be used in subcontracting, is this order type, which is CPOM. So this is a default order that SAP, in our configuration, we have it. So that is used by this process. So that's first thing. And it's if you think about it, the configuration changes are very minimal. Having that business functions active, it's very few changes that we have to make in the system. One of the thing is this using this order, as we have a separate order type CPOM. Of course, we have to do a few settings to make it used in subcontracting, which is the valuation variant, settlement profile, and template. I'll come back to it. Results analysis and various settlement, etc. So settlement profile. Now, if we look at this slide, we can relate to that. Oh, this is very similar to what we do around manufacturing, our in-house manufacturing, or our production process order. We name it, whatever manufacturing type we use, we do this setup. It's all standard setup. Now, that is the beauty. Having outsourced manufacturing in such a space is not an additional knowledge gap or something that we would incur. It's the same configuration that we have. Only thing is, like, we just have to activate this order type. Copy. Many times it will be just copy and add a record to our configuration under SPRO. So that's the change. The reason I brought up the template here, I know this is definitely optional. One of the on around subcontracting, apart from the tracking of manufacturing, etc., has been, how do I assign some overhead costs to our subcontracting process? Because we know we have a couple of things in subcontracting. We have our bill of materials, which goes into subcontracting. We have subcontracting purchasing info records. But between these two, let's say subcontracting purchase info record is a vehicle by which we can add some overhead. But then if we do that, unless we go for major enhancements, etc., the overhead, if we add it to subcontracting info record, that's get blended with our external parties charges. And then we cannot segregate the overhead, excuse me, from the normal charges that will incur for the payables of our external suppliers, manufacturers. So that is where, excuse me, the template allocation is one of the method. It can be costing sheet, can be something. But the benefit of outsourced manufacturing is it enables us, it gives us that flexibility to use some robust method of overhead allocation in our processing. So that's why I want to call it out, and I have configured the system. We'll see in the subsequent slide, that I'm using a template to allocate some overhead into both the plan, target, and actual, like our usual costing steps. Another point is, what are the master data changes? This process, and that's one of the reason I wanted to call it out here. It uses the existing setup. It uses the subcontracting purchase info records, uses the bill of material existing. If we have subcontracting going on, if you don't have subcontracting, then it will be a new setup, but then it's all standard. The only changes and the conditions on the subcontracting PIRs is all part of our design to implement subcontracting process in SAP. The only change that it requires, outsourced manufacturing requires, is this real-time consumption checkbox. It is a tiny little check box on the subcontracting PIR purchase info record master data under purchasing view, and that holds a lot of power. If we check the checkbox, then outsourced manufacturing is active. Now, at the same time, one of my clients few years back, they wanted to manage products, some products as subcontracting, some as outsourced manufacturing. They could achieve, having this business functions active, they could achieve that by using this functionality, that they can make it on and off depending on product also. I mean, that's like a example or a use case. But that flexibility, that is something outsourced manufacturing brings in, and we'll see that. And the next slide, and that's kind of the core of the whole outsourced manufacturing design or processing. So that is what in this left-hand side I'm showing here. I'm calling it out real-time consumption need to be checked. And once we check the checkbox, then this outsourced manufacturing is blended into subcontracting, and it will be fully active. And how does it work? We'll see in the next subsequent step. But that is kind of a initial setup. And what I'm showing here on the right-hand side slide is, in my example that that I'm going to go through, deliberately I have tried to add an extra condition onto the subcontracting PIR to segregate the concept of internal overhead or some kind of an overhead allocation than having subcontracting fee or charges, etc. So in this PIR or purchasing info records, I do have freight, and I have the regular vendor agreed or external manufacturer agreed charges here. So $1,800 for each is my subcontracting fees, right? And we can go a little bit deeper also. I have not done that, which is very much possible. The freight accrual, which is the second condition we'll bring in, that could be managed with a separate supplier, but most likely, but there's an enhancement. So that's why I wanted to show it and call it out that this is having the second fees here. It's going to be applied to the external manufacturer. So that's the purchasing info records, kind of the step one. We have bill of material is step two, but the step three, which is this one, what I'm trying to showcase here is, if we have requirements, and this is optional again, as I've been saying, if we have requirement that we want to add some kind of allocate some kind of overhead to this process, could be various reasons for better make or buy decision, not to swing our external manufacturer that our internal manufacturing process is having. So to get it like a to build up some kind of a similarity between internal manufacturing and external manufacturing, if we want to add overhead, this is one of the methods. So here I have set up a template, and we have a dedicated template also for actuals, which is the template environment number 12. And we have 001, which is our costing template that we can use for planning, etc., for standard costing, if that happens to be the costing method. So here I'm showing both is possible. So that's the overhead part. Now, Having that setup done in the system, now next thing is, what do? We go for a standard cost estimate creation, and then in example is showing the costing losses is 10, hence the $1,800 that I have on my coming from the purchasing info records times 10 becomes the $18,000, and I have the material component, which is one material in the coming through the BOM, which is our standard BOM, and we have that template getting us a little bit more overhead onto the standard cost, and hence thus 31,000 is my total standard cost for 10 EHS. Right? This is an example that I've set up, and we can do various based on requirement. We can tweak it. We can have different alignment of the we can have multiple conditions from templates. All those cool things we can do here. And the right side shows our standard costing cost component breakdown screen. So I have my $31,000 being segregated into its own component. I wanted to keep it simple, like the $1,000 is just one material overhead cost component. Moving on is our transactions. So having done the costing part and setup part, now if we think about the actual transactions, having a PO, purchase order, subcontracting purchase order that we are going to create, how does it work? So what happens, couple of things, which is all standard, very, very cool with this outsourced manufacturing process. Once we have the PIR set up in the way I explained and costing done as we would intend to do, once we create a subcontracting PO, purchase order, if we have the right combination of the supplier, external manufacturer in this case, and the product and the plant, which is going to receive the product, if we have all this combination set up, it's going to invoke the purchasing info record, subcontracting purchase info records, and having real-time consumption functionality checked, it's going to create, convert this subcontracting purchase order, which is we call L-type purchase order, that is the I here. It will convert it to a FNL. F stands for the account assigned category that gets defaulted for this purchase order, and having an F here for the, which stands for the CO order, it's going to do the magic kind of behind the scene. And if I move on to the next screen, you would see automatically system would create an CO production order, controlling production order, as we've been talking, and it's going to assign that to the item. So that's how this regular subcontracting purchase order got transformed into an outsourced manufacturing purchase order. Now, once we do that, other things are all normal process. We will have the bill of materials. It's going to get the price from the subcontracting payer or the standard functionality of subcontracting. Now, at this point, so let's say that we have the subcontracting PO set up in the system, ready to be transacted and it's ready for carrying out these steps. I wanted to also call it out. Okay, at this point, how does the CO order that system automatically created looks like? So if you look at here, it copies over and transforms a lot of purchase order, subcontracting purchase order details over to this controlling order type, which is the CPOM order type. It will have the material assignment. It will have all the status management like we do in our regular production or process order scenarios. It can be updated. It can be used for commitment management, like we do for other orders. So all these functionalities are there. And if I go to the next screen, this is the best part. This CO production order is now having full visibility to the purchasing order that we saw in my other screen. So the subcontracting purchase order and all its details, like the suppliers, the volume, the quantity being ordered for, and the price units, etc., all gets mapped over to the CO production order. And till we have not done the transactions, if there is any PO purchase order revisions, etc., it is going to update this your production order real time. So that's also a lot of benefit. Like if we go to the PO approval, purchase order approval process, we have any tweaking that we need to do before we send it out to the supplier, external manufacturer, we order it. All those changes is updated here real time. Pretty cool things around this integration. And we have this subcontracting cockpit, which is our new SAP's new cockpit to manage our subcontracting process that is fully going to track the outsourced manufacturing. So here we can track this one monitor, which is an Fury app, can track anything and everything around the logistic processes. We can, and however is our process, and it can be a little bit varied depending on the business scenario. We could create deliveries, let's say outbound delivery, inbound delivery to handle the logistic part due to various reasons. For example, like from my experience from around SAP TM, we need, and then whoever has dealt with transportation management, they would know inbound delivery for finished goods is kind of a must to having transportation management running up and running. So that is all of those features, processes, process steps can be handled through this cockpit. And if we have to send out the component, which in our normal subcontracting lingo, we call it O stock, the subcontracting special stock category O, that is also tracked here. So this cockpit can handle all those logistic processes. And I'm not, as I was saying, I'm not going to go details around this. And this is step I am showing, okay, now having got that, let's go through the transactions. So the first and foremost step is, or this step can be changed depending on business process. In my case, this is where I'm receiving the goods first. So let's say we have ordered, we have the purchase order submitted, everything done from that purchasing perspective. We have logistic processes done. We have supplied the components that we had to supply to the external manufacturer. They have completed their manufacturing. Now, once we receive it, the goods receipt is an individual step, which could be done through inbound delivery, can be done through PO as business would dictate. So that process is possible. The only thing, the change, which I would like to call out very interesting, is we see here the components also being reflected, but as we have outsourced manufacturing, the components quantity would be changed to 0, and that's a standard SAP functionality. I remember like long back when I was implementing my first, and then I was wondering, hey, what's happening? Is there something, a bug that system has? No, it's standard. It's part of the outsourced manufacturing. We would see the component just for logistic purpose and for visibility, but it's not going to show up the components based on the bill of material or the right target quantity. It's not going to show that. And what will happen? When would that be? That step we will do. We'll come to that. Before that, here the finished goods that we received. Now, what's the accounting behind it? And as you see clearly, the outsourced manufacturing driven the order, which is our, let's say, external manufacturing order, that is being tracked for all the expenses and all the postings. So our inventory, and then these two steps, and just to kind of segregate between outsourced manufacturing and the regular subcontracting, as we know, like there are the 3 high-level steps: goods receipt, the PIR, the fees posting, the accrual for invoice, and the consumption. Out of the 3 parts, 2 parts, which is the finished goods receipt and the subcontracting fees accrual, is done in this one step, which is the goods receipt. And then as I had the freight, which is in my case also is being charged by the supplier or could be by a third party carrier, that also I'm going to accrue that. So that is all part of the accrual. Now, this is the step which I was talking about. This is the segregated goods consumption. So here I'm consuming the component. This use case of this screen is the BOM had 100 quantity to make 10 units of the finished product, but I'm doing actuals here. That's why this slide says actual. So instead of doing the subcontracting true up, which the manufacturer would have done at their location, that step is blended into one, could be blended into one, and we can get the actuals either through an interface or however sophistication we want to um, bring in into a process, but then we get the actuals through this step. Now this step, which is the third part of the subcontracting or process, which is the consumption of the component that we have. So that is what this screen is showing, the counting of that screen. And then as we see, the order is reflecting in the consumption. Now, let's say this is the invoice receipt. So this is kind of the last step of the outsourced manufacturing step. Here we are receiving the invoice from the external manufacturer. And the scenario here is, and deliberately I was trying to do that because many of my clients asked that, I have a different invoice price than we have planned for in our standard and our PO. So here, instead of 10,000 that we saw out of the 18,000, we have $12,000 as the invoice fee. So the 2,000, which is the delta, that also gets tracked into the order. So that's also, so the full visibility of the actual cost incurred is available on the order, on the CO order. Now, if I, so here is where we kind of end up the logistic steps. There could be other logistic steps as quality inspection, batch management, etc., which I'm not covering here. If you guys have any detailed questions, I will be happy to discuss about those questions. But moving on to finance steps, now all these next few screens are what we know from a production, manufacturing, and costing perspective. So as our period end close general process stands, we do for production orders, we do work in process calculations or results analysis calculations. We do variance calculations, and having these two calculations done, so we could do the settlement, which can post either or of this values, like it can post work in process, which I meant the settlement, or could post variance. Both these transactions get active once we have, for subcontracting, once we have this order type. So, and this is the scenario I'm showing an example that, oh, if we have middle of the end of the period, but the order is not done, then we could also calculate the work in process if that's a business case. So that is fully available standard by SAP. Moving here, as I've been laying out the scenario, I'm trying to add some actual overhead. So that's this actual overhead. And then I'm trying to build a variance. So instead of $1,000, which is planned, I'm building up 1,100 to so that, oh, we can have actual overhead allocated to this process also, because of the whole fact that we have an order. The next screen shows the typical, if you look at this is the screen we are all familiar with, at least those of us or anybody who has dealt with CO month-end close, like controlling month-end close, they would be very familiar with this screen, which is our order cost analysis. And this screen is all active with our controlling order type. So we can very well target this, capture the subcontracting related target cost based on our standards and yield, and we can calculate which is normal, which is the actual cost. And this screen shows, in my example, how did I run through the steps. Every steps I built up the $13,200 is my component consumption. I have a little bit variance there. So every step I have built variance just to showcase that if we have varying actuals, we can track actuals. And then if we have varying actuals than target, we can capture the variance. And the variance category analysis, the full functionality of that is also available with this CO production order. And then this screen also shows that I have done the settlement of $3,300 here. So I have completed that whole cycle of the CO order. Again, one of the things that I'd like to emphasize, this is like the same process steps, like CO production order goes through the same kind of status management and status life cycle. It goes through release, fully delivered, could be take code, like the normal internal manufacturing process and life cycle statuses, we could very well blend into this process. So it's not a new learning for business. If business has been doing that for internal manufacturing, only thing we have to train the business organization would be to do the similar for external, if that is a business case. Again, in some cases, external manufacturer is given access based on various setup, like having a separate dedicated plant, etc., that they can also operate in our system and then manage this whole manufacturing. So we have full visibility to the processing. This is variance calculation. It is active with this thing. And this is the detail of the period and step. It can do like we do for production order, process order, the settlement. If we have variance, it can settle the variance. These accounts are all my test system accounts. So if you have different kinds of accounts, so all those accounting can be leveraged, but very similar to internal manufacturing. Now, next two slides, what I did was always I had in back of my mind, okay, I have got that. What's the key variations between this process, the outsourced manufacturing versus regular subcontracting? So I have this T accounts because as we are all accountants, so we like to have the numbers presented as T accounts, and I don't want to if it's too much, I don't want to go through each number, but the highlight is between outsourced manufacturing, and then I just want to showcase what we have here. I have comparing a slide to compare it with regular subcontracting. If the same process would have been going through our regular subcontracting, what would have been the accounting? So we get a clear picture here. I will call out the differences here. The first difference is the condition that we, so step one, the first difference is the conditions that we add to subcontracting PIR. Let's say we have some delivery charges that we also would like to track along with the subcontracting or tolling fees, etc. That gets blended and posted to the same subcontract account. So that is can be a con if that is something that is a business requirement, but I just wanted to call it out to be fully transparent around this process. So that is one thing I have noticed, and there is ways to avoid that, but in standard that becomes the normal processing. Everything else is, I would see as benefit from my perspective. If you look at this accounting, it's very much similar to that we get from a production accounting, production or process order, however, internal manufacturing accounting that you have, that is same that now the external manufacturing is going through that. And the one of the key benefit is I remember in many of my from many of my clients, they would like not to confuse the purchase price variance, which is the account that regular subcontracting uses to post the variance. If we have any difference between actuals and target or plan, then that goes into the PPV type of account, but not here. Outsourced manufacturing, as it has, it is bringing in processes accounting like the production accounting, that variance gets settled to a dedicated variance account, more like internal manufacturing than regular PO. So that is a key benefit that this has. And now in this slides, which is regular subcontracting that we see. And as we know, if you activate that functionality of tracking variance for regular subcontracting, all the variance gets posted to this variance PO account, in my case, 6411. That is the account that is used by regular PO purchase orders, as well as the regular subcontracting PO. And that's kind of a, has been a major kind of sore point for my client's perspective. I know there are ways to put in baddies and enhancement, but this is all standard. Using outsourced manufacturing, we don't muddy the water for purchase price variance. Purchase price variance would be solely purchasing related, not external manufacturing related, because external manufacturing will be handled more like production order. That is the benefit. And so you guys can go through this accounting, but I just want to compare the numbers, same numbers I have used, and gives us the perspective between this process, regular subcontracting versus the outsourced manufacturing. And this is a very good report that I have used, which comes standard with outsourced manufacturing ME2 comp. ME2 comp can track, give full visibility of the orders, the consumption, the goods receipt, invoicing around each of the PO, that is outsourced manufacturing. So I wanted to call out this report, very useful report, and it's purely available in Fiori. So this once you have got the business rules, this is standard. Now, this slide, I'm calling out the pros and cons. So as we spoke about having a CO, dedicated CO production order type gives us target and actual comparison functionality. So full transparency can be built. I know the yield variance, the usage variance, all sorts of like the typical variance categories that we would like to track for external manufacturing. Also, that can be standard available and can definitely a pro for outsourced manufacturing. And then that's kind of a drawback for subcontracting, that it doesn't have that functionality. And the second is additional expenses can be accrued, which we saw here. In my example, I could use, and then if I have actual invoices coming through outsourced manufacturing, all those expenses get tracked in the dedicated CO order. So the variance variance and analysis can be the standard SAP production order variance analysis can track the all the variances in each and every step. Template allocation is possible with outsourced manufacturing. We saw that if that's something we would like to use. Accounting difference, it's outsourced manufacturing makes the external manufacturing more suited towards like we do for in-house manufacturing. So better for a production accountant to manage it, even if the external manufacturing accounting team is separate, but they usually maintain this, manage this in this fashion so that manufacturing accounting can be compared, and both are in the same kind of parameters. And the component consumption is a separate process which brings in benefit. It can be automated, but as I'm calling out here, if we don't have SNC, which is add-on system, we have to pay for it, and we could build interface. But if we don't have that, it's still manual. I mean, we have to do as normal processing of components, list of quantities that we get from external manufacturer. We have to consume it. But if we can build any automation, then it's seamless. We can get in one step the actuals as reported by the external manufacturer. The next two steps, we're talking about variance analysis. So detailed variance analysis can be achieved here using outsourced manufacturing. And one of the things I've always done, the CO order that we have, I usually map it to a different accounting number range. So looking at the order type, the order number range, we can segregate the reporting, even if we don't do anything else. So all our production order reporting can very well be used for external manufacturing, having this separate number range for the CO order. That's a pro. It gives us that flexibility. Here I have one of the standard SAP outsourced manufacturing related help portal, and there are many good topics and blogs also, which you guys can read and browse through. And I think that concludes my what I was intending to cover.
Awesome. Cool. Well, if you guys have any questions, now is the time to put them in the chat. We'll give you guys a few moments. We've had a few come through during the presentation, so we'll go ahead and get started with those. Okay, Surjit, first one is, how would a QM flow work with an outsourced manufacturing process?
Yeah, thanks, Rob. That's a very
Mhm.
good point, which I did cover. Having outsourced manufacturing blended to our subcontracting process brings in little changes for our QM team, our counterparts. And I'm saying from being a CO consultant, the process that, let's say the existing process that is quality assurance, QA process, inspection, lots, all the standard configuration is there. But having outsourced manufacturing, we have to create two inspection lot for to achieve the quality QA, all the QA steps, like sampling, usage decisions, everything now revolves around two inspection lot, and the inspection lot which we could use is 01 and 05 if you're familiar with QA setup. Those could be leveraged, and there is one another point around that which I wanted to keep it to the very end. Outsource manufacturing, the goods receipt part, which we know from all our experiences, 101 movement type. But with outsourced manufacturing, there is a separate movement type, 521, which system does behind the scene. Like when you look at the goods receipt document, sometimes if you're not familiar, we'll get confused. Oh, how come I have two movement types? Yes, that's standard. System does that to reflect the consumption, the finished goods consumption, or as we call it, like the factory production from SAP's terminology, reflected on the CO order. But as we have two movement types that goods receipt brings in, hence the QA inspection lot has to be two-step. But what SAP standard offers, if you look at 05 and 01, once we map it, one of these is all standard. We just have to do processing on 01. The 5 would be automatic.
Nice.
Yeah. Hope that
So
that answers the question.
yeah, it should. And if anyone has any comments on that, please leave those in the chat. Second question is, can the same batch be used for raw materials and outsourced finished products?
Yeah, that's also a good point. Many of
Mhm.
my clients I have seen, especially like some typical industries, let's say pharma or let's say specific industries around let's say CPG to some extent. If we have any requirement under batch management, like which batch does the components have, and then which batch does the finished goods have, and if we have some kind of inheritance, as we call it during batch management, if we want to keep the batches predefined and like a process order where we could inherit from the components to the finished goods. Some industries they have this functionality or requirement that the component batch should reflect on the finished goods, and which we could very well achieve through production order. That functionality is also available in outsourced manufacturing, though if it is too different, like we have multiple components having different, we want to pick one into the finished goods, then we use a user exit for batch inheritance. But if not, then the other way, we can map the outsourced manufacturing batch genealogy and then the batch inheritance to make the batches flow between like a production order does.
Nice.
So that's a good point. Good question.
That is. Looks like we have one more. If you guys have any more questions, again, now is the time because we will be wrapping things up here. Okay, so last question is, can the variance split be activated for subcontracting?
Yes. Uh, so as we saw, if we have S4 and if we are using the variance splitting functionality for in-house manufacturing, the same thing we can do for outsourced manufacturing. As we saw, the concept is similar because we have an controlling production order. We are getting full benefit of our typical KKS2, KKS1, which is like single or multi plant level manufacturing variance transactions. As we have all those available and the settlement is available for the subcontracting, now having outsourced manufacturing, variance splitting can also be activated. and that functionality can be fully leveraged for outsourced manufacturing. So that's definitely a pro for outsourced manufacturing, and that is kind of then available for subcontracting, which is typically not possible having a regular subcontracting process.
Nice. Awesome. Well, that appears to be all the questions. Again, if you guys have any more, leave them in the chat. If we didn't get to them, then we will be sending a follow-up email with everything that we've covered, along with any unanswered questions. And again, you guys can find us on our website, ERPFixers.com. Press the contact us page, and we will be in touch with any questions or comments you have. And again, Surjit had disclosed his email address. Just one last time, Surjit, what's the best way for people to reach you?
So here is
Right
my
there.
email address. Yeah.
Nice. Cool. So feel free to reach out with any questions that you guys have. And again, thank you everyone for attending. It's always a pleasure having these. We have them almost every month, so please feel free to attend our next one. And thank you so much, Surjit. That was wonderful.